Welcome back. Now, Santam has posted bumper annual profits despite challenging operating conditions. The short-term insurer's headline earnings per share has shot up by 27%, while the dividend is up by 7%. Wikus Oliver, who's a CFO of Santam, joins us with a closer look at the drivers behind this period's performance and what it suggests for the group moving forward. Wikus, a pleasure. Good afternoon.
Good afternoon. Good afternoon to the viewers as well.
Thank you for speaking to us, Wikus. A bumper period for you. Let's talk about the top line and how that all fed into that robust bottom line.
So from a top line perspective, we were able to grow our gross written premium by 5.5%. But I need to point out that we remain focused on profitable growth. So we did cancel a total of 1.3 billion in premiums. If I exclude that, we grew the overall size of the book by 9%, which is actually well above our target of 1 to 2% above nominal economic growth. So I think it's a very resilient performance despite a challenging economic environment in South Africa, and also with our personal lines and commercial clients feeding the pressure as well.
I want to speak about the underwriting margin, Wikus, and managing that throughout this period. Of course, we know that we're in a generally high-cost environment, but also it's just a riskier atmosphere.
Yes, the risk has definitely increased over the last number of years. So in 2023, we did experience adverse claims experience from weather-related claims, in particular the hail in Gauteng in November and also the two floods in the Western Cape during the year. And then we've also seen quite a tick up in the frequency and severity of fire claims in the commercial space as well. We also had exposure to Turkey. So yes, a very difficult period from a claims perspective for us. But we can weather these storms as well. We've proven that we can turn around the books. We've fixed the profitability of our motor book. We've mitigated the power surge losses that we had in 2022. So our focus is now shifted to the property book, where we most severely see the impact of fire and weather-related claims. So we will be implementing a number of actions there also to improve the profitability.
I want to actually touch on that, this strategy that Santam is currently under, Wikus, to obviously be very selective and strict about the kinds of, premiums and projects that you're taking on here. Let's talk about that and what it is informing it. Of course, we know that the aim here is to reduce costs, but let's talk about how you're also, the criteria that you're applying.
Yes, so for us, it's to have to cancel business is last resort, because we do recognize that there's a big insurance gap within the market globally, but also in South Africa. So our preference is rather to look at whether we can put through a combination of premium increases and, importantly, also work with our clients in managing risk. And simple things like, for example, requiring installation of sprinklers within properties, etc., to bring down the risk of loss, which then also helps us in turn to keep the premiums also as low as possible. So that is just some of the things that we're doing. We'll also be increasing our surveying of properties as well. And then we're also busy rolling out what we call our geocoding kind of initiatives, which is effectively putting our XY coordinates next to each property, overlaying flood lines, etc., to make sure that we only take on the risk that we feel that we can price appropriately and where we can manage the exposure and the risk as well.
Very, very interesting. You are also consumer facing. What we find is when consumers are cash strapped, because the first thing they do is skimp out on insurance. But have you seen this trend emerging at all during this period?
We have seen it in particular within our MyWay business, which is a direct business that plays in the lower middle income market segments, where at the beginning of last year, they did experience lower conversion rates on new business. So the new business went down, and they also saw quite an uptick in rejected debit orders. They have, however, been working very actively on those. And from a positively, actually, they've seen an improvement in all of those metrics. So towards the end of the year, we did see their growth rates also accelerating, debit order rejections coming down. So working also with their clients to make sure that policies don't have to lapse.
Let's talk about the balance sheet and how that's faring right now, and also capital requirements, capital allocation. How has that fared over this period?
Now, as a group, our solvency remains very solid. So we've set ourselves a target range of 145 to 165% solvency ratio. And at the end of the year, we were in the midpoint of that range, which is actually one of the reasons why the board could declare an increase in the final dividend of 7.1%. And during the year, if you look at the total distributions to shareholders, we've paid total dividends of close to 32 rands per share, which is more than 12% cash yield to our shareholders.
I'm sure shareholders are very, very happy with that, Wikus. Let's touch on the outlook here. Looking ahead, we are expecting interest rates to possibly fall in the second half of 2024. Are we anticipating that that would be good for Santam? But also just the macros. Are we expecting that those could improve and give Santam a boost?
Yes, I think if you're looking into 2024, we don't see a sudden acceleration in economic growth within South Africa. So we do expect the economy will remain under pressure, similar to what we've experienced this year. Interest rates, if those were to come down in this coming year, of course, it will provide relief to our consumer base, which will make insurance also much more affordable, and which will also bring down the lapsing of policies due to debit order rejections. But that said, we're very confident that there's a lot of opportunity for us to grow within this market, despite the challenge that we face. For example, within the direct space, we don't have a fair market share there yet. And also through our partner solution business, there's an opportunity for us to partner with businesses that have got a large client base and cross-sell into those clients' segments as well, to really reach those segments where we don't really play that much today. So yes, it will be challenging, but we're very confident in our prospects to continue growing.
Well, Wikus, it's been a pleasure hearing from you, and congratulations on this bumper performance. That was Wikus Oliver. He's the CFO at Santam.